Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Zacks Top Stock Picks. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks. And I've got a pick for you that is reporting earnings later this week. So let's go right ahead and take a look at my pick for the week. American Airlines, AAL is the ticker. So yeah, American Airlines is my top stock for the pick, top stock pick for the week, and it's AAL. It's a Zacks rank number 2 that makes it a buy. It's got an A for value and a B for growth. Normally, I do these aggressive growth videos, and I like to see a solid growth score more than a stronger growth score than a value score, because that tells me I'm in the right path already. But this is for a top stock pick for the week, and this company is reporting earnings along with a bunch of other airlines later this week, and you can see right here, big positive earnings ESP, which indicates that there's a decent chance for a beat. You also see a stock price since the beginning of the year that has seen a nice solid move up. So when I combine those two things, I think, boy, this is something worth a deeper look. So let's go ahead and run through all the stats and things that we would normally look at in my aggressive growth videos. Earnings history, we've been beating the number. That's a beat. That's a beat. A little miss there, but a nice solid beat here last quarter here, so 27%. So that really skews that average up, but we're at 8% on that. So where have estimates move? That's kind of the question. And as we can see here, right here, we can see that estimates have crept higher over the last little bit, from 58 cents 30 days ago to 84 cents for this quarter. Then a loss for next quarter has swiftly moved to break even. For this year, we're going to actually, it looks like we're going to make money for this company, which is great. And then next year, you can see the estimates have moved up $1.64 to $1.93. So those are some strong estimate movement for an airline. And airlines have traditionally had a lot of trouble making money. If we take a look at the valuation here, I think you're going to like what you see. I got an 8.5 times forward PE, which is pretty small. Solid top line growth of 50%. We've got margins which are actually going to flip to positive here if we have these break-even years or better. No price to book, which is interesting, and price to sales there is super low. All in all, I like the 8.5 times forward, and I like the good solid growth. So let's take a look at the chart here, if I can, and I can. All right, so we can see that this stock's just been beaten down, but all of a sudden, whoop! And I know that this is a big long time frame, but here it's this little move right here, and we can see where earnings estimates, back a few years ago, really caused that downturn there, and the stock is, the estimates are still nice and high up in there, so you would think that the stock has a good chance of getting back up, to maybe even the 30s, and that feels like just about a double from here. So definitely a stock that's worthwhile watching here. Earnings later this week, positive ESP, which indicates that the most recent estimate revision is much stronger than the consensus. So take a look at that and keep that one on your radar. Well, that was a lot of fun. I hope you guys learned something there. Let's pass this now to my colleague Jeremy Mullen, who's got another top stock pick for the week.
Thanks, Brian. I'm Jeremy Mullen. I will be doing Toast, ticker symbol TOST. The stock is a Zacks rank number 2 buy that is a cloud-based technology platform for the restaurant industry. If you've been out to eat lately, you've probably noticed these handheld devices your server uses to place your order or charge your credit card. These devices are becoming a must-have for restaurants, and I'm seeing them everywhere lately. I often engage the servers on their thoughts on Toast, and it's always a very positive feedback. They love how easy it is to use, and one server recently told me that it cuts down on a lot of the common errors that you typically see on a day-to-day basis at a restaurant. The software also allows the restaurant to manage payroll, scheduling, and basically everything else in the business. But what does this mean for the stock? While the company seems to be gaining market share, it does not mean the stock will automatically go up. So I wanted to dig into this name and discuss other reasons the stock might be a great buy. Okay, a little bit about the company first. Toast was incorporated in 2011. It didn't become public until late 2021. The company is headquartered in Boston, Massachusetts, and employs over 3,000. Now, looking at the profile page, we can see we have a market cap of almost 11 billion. The stock is up a little bit today, so it's a little higher. This is down significantly from its IPO valuation of 20 billion, so basically cut more than half as the stock fell to lows earlier this year or early last year. Looking at the style scores, we have a D in value and growth and a C momentum. The valuation part is really where investors struggle. It has negative earnings still, so what investors need to see is for their earnings momentum to accelerate. And we will look at that next as we look at the price EPS surprise chart. As you can see, when it IPO'd, earnings didn't impress and the stock collapsed, and then we had a big miss. And since then, it's been trading sideways as we have 3 straight EPS beats. Really nice quarter, and this is the one that caught my eye back over the summer, a 54% EPS beat, and then this Q3 here on almost 14% EPS beat. I want to talk about this one. That was in late November, and they beat by 3 cents. Revenues beat as well. The company saw 752 million versus the 716 million expected. The company also raised their fiscal year 22 adjusted EBITDA and revenue guidance. Their gross payment volume was up 53% year over year, and their annual recurring revenue was up 60% year over year. Management commented after the quarter that they continue to balance efficiency with disciplined investments in innovation to power the restaurant industry. So let's look at the estimates and see what analysts are saying. As you can see, we have some revisions higher here over the last 60 days. What we really want to look at is what's been going on since earnings. As you can see, once they released, analysts raised their estimates. Still negative, but this is a nice little 13%, 14% jump here. And for the current year, we see a 10% jump. Now, next quarter, it's kind of wishy-washy back and forth. So there might be something analysts are seeing over the next quarter that that they don't like. But if you look long-term, really nice improvement here, 20% improvement over the last 90 days. So analysts are really liking this longer term. And earnings are going to be in the middle of February, so we will see what they do there. And I would definitely watch for these numbers. And if they're improving, that would be more of a catalyst to be long this stock. Some price targets for the company. Pat Crest has an overweight and a $26 target. Mizuho has a buy and a $24 target. Piper has an overweight and a $22 target. So they're seeing a little bit of upside there. Now, let's look in the chart and see how we can get to those targets. Okay, here's the chart going all the way back to its initial IPO. As you can see, it traded well over the $50 mark and made a high near 70. Now, this was a different time, right? This was before the tech sell-off in late 2021 and into 2022. And after topping out, the stock just fell into this channel and bled lower. And then we kind of traded sideways. We did see the dip down to $12 area when the selling intensified in the overall market, but gradually came back and had the solid earnings back in August, but couldn't break this $21 area. So you can see 1, 2, 3, kind of 4 times, 5 times we've been here, and the stock has pulled back in. So today it's over 21, so that's definitely progress, and I think we can break higher. Let's see how we can get there by zooming in. Okay, so I've had this Fibonacci retracement drawn up since basically these earnings here. The stock from the lows to highs pulled into the $16 level, and this is where I see the 61.8% retracement holding. That's when I get excited. Had a nice run, but after taking out those highs, came back in, and the moving averages aren't really doing anything as far as support. It's been all about this $16 level. Tested again, rallied, almost tested again, and we're rallying again. So the targets I have are 24.80, so that $24 to $25 area, and we're making some progress over this 22 area. We can get there rather quickly. I would like to see it before earnings. We could grind higher, but investors might want to wait for that next catalyst before they do it. So short term, to sum it up, I love getting long in here for that target, and then longer term, you might be sitting on a bigger up move at getting back to those initial IPO valuations. So I'm liking the chart right now. Sometimes we find opportunity in stocks by just observing what's around us in our daily lives. I remember the opportunity I saw in Open Table before that stock was acquired, and now I see it in Toast every time I go out. I encourage you to take a look to see if your server is using Toast and just engage them. Ask them what they think of it. I've been blown away that almost every place in Chicago I go to uses it, and the stock, it's been trading sideways, and the company just needs to continue the earnings momentum for it to break out. So we might be seeing investors front run that idea as the stock slowly creeps up to 3-month highs. And I think short term is a great trade at 25, and long term, investors might be sitting on the next big thing in the restaurant industry.